Well, if energy markets are losing thousands of gallons of oil every day in the Gulf of Mexico, threatening the environment and also the future of offshore drilling, why are oil prices pretty much not moving on this? Well, my next guest says he knows why. Stephen Schork is the president of Schork Group, which publishes the Schork Report energy newsletter and also handles trading. And Stephen joins us now on the phone. And why aren't oil prices reacting more to this?
The fastest answer here is that we still have an overabundance of supply. Regardless of what we're losing in the Gulf, regardless of the potential disruption to shipping traffic in the Gulf of Mexico, the bottom line, Betty, is we still have a lot of supply, and we have more supply than demand at this point.
Well, the longer, though, that this takes, Stephen, to clean up, let's say it takes months, is that eventually, though, going to affect the oil price?
Well, we have two things at play here, Betty. We have, one, 727 million barrels of oil sitting in the Strategic Petroleum Reserve just in case we have an emergency such as this. And more importantly, we have an overabundance with the term structure. That is, we have an incentive to build storage. So regardless of what we see in the Gulf, we still have a lot of oil that comes down via pipeline from Canada. And given where the term structure is, it's more than twice the cost of carry. So quite evidently, in the near term, the market is betting that supply will still outpace demand.
Okay, well then outside of that, outside of the supply-demand situation, is the oil price going to move, though, on political threats? And you know what I'm talking about, Stephen. These politicians now saying that, look, we're not going to back offshore oil drilling anymore.
I mean, of course, that is a potential, but mind you, we have a severe deficit, not only monetarily, but also in jobs. We have a health care proposal or health care reform now that we are going to have to pay for. And given the potential of what drilling brings to the table with regard of generation of revenue, yeah, I think the rhetoric is quite belligerent right now, but this too shall pass.
Right. It's pretty reactionary, of course, at this point, Stephen. Let me get down, though, to the basics on what you're hearing that's going on in the Gulf right now. Are there other rigs being affected by this, and could there potentially be more rigs being affected if this cleanup continues to go on?
Absolutely. We have already some natural gas rigs that have been shut in as a result of this. But again, we're talking in the short term here. We still have record supplies of natural gas, and quite literally, it always comes back down to supply demand. And we're at a point now where we have so many barrels, not just of crude oil, but also of diesel fuel and gasoline and jet fuel and so forth. So the market, again, because we have a situation, Betty, where yesterday crude oil, storage only costs you about $1.25 a barrel per month, and yet the differential between the first two contracts was $3.
Right.
So I could buy oil, put it into tank at $1.25, and I can still make $1.75 in 4 weeks. Okay. Well, what's important here, Betty, is Wall Street is so long this market, right, and the storage capacity at the NYMEX hub is maxed out.
Right.
So even if those guys wanted to make delivery of the oil,
okay,
they can't.